Yeah, blockbuster it is. It's the January crop reports have a tendency to really change things a little bit, and this year, what changed, or I guess was that anybody's mindset that said that we didn't have a big crop, and of course the bushels were raised, the yield was raised significantly in corn. The government didn't change the harvested acres and opted instead in corn. That would lead one to believe that they may believe there's going to be some corn that wasn't harvested. They're going to revisit this situation again before the March 10th crop report, and of course looking at the supply side of things. But basically, we came in with more corn, bigger yield, 164, I believe it is, and I think if you think about it yourself as a producer, and I saw it throughout the country, all the way from North Dakota to Illinois, where we had bad crops or bad low test weights, was that a lot of complaining about what it costs to dry this stuff, $100 to $125 an acre in some cases, and the market doesn't really care. And I know when I looked at it myself, I was complaining about it, but I was looking at the monitor and thinking, my golly, I still got a pretty decent crop. So I think what we saw was, even in spite of all that, we had a good crop, and it was the fringe areas. As we go through the individual states, the government has in their WASI report, we'll see that these fringe states were the ones that really kind of helped us. You get a pretty wet year and non-threatening in heat, you're going to get these other states that don't normally produce an Illinois-type crop producing one, and they did. So we've got a big crop of corn. Carryover is going to be in that 1.7 area. Looking forward to next year in corn in particular, what this does for us is, in all the acres that we have out there now, and I guess I should mention that spring wheat, soft red winter wheat acres were down significantly more than most thought. We felt that they would be down 3 million acres or more, and they were. So that frees up 3 million acres, some of which would have been double cropped anyway. So if it all goes to beans, you've got a bigger bean yield. Some of this may go to corn, some of it may go to cotton. And the price of the grains today, with corn down limit and beans down, corn, beans, and wheat are all down about the same. So corn got hit the worst because it was the most bullish. And so looking ahead, you can assume, and then the trade picks up on this real quick, says, holy cow, we got acres to plant. Where's it going to go? It can't go to a soft red winter wheat anymore. Spring wheat is down 34 cents, so it's down as much. We have a shortage of wheat perhaps in the making in the U.S., or drop in reduction in the production side of it, but we have so much of it in the world and in the U.S. that the market doesn't really care. So from that standpoint, we need a crop problem someplace in the world by a major exporter, and that includes the United States. We need to kill some of this wheat that's left with freeze or flooding or whatever, and in the meantime, the acres are going to go to corn and beans. So looking ahead, you could say that this crop said that we produced a big crop in corn and beans, big yields, record yields in beans, and we can do both in a year. That sometimes we used to say as producers, if you get a big bean yield, you can't get a big corn yield, vice versa. It doesn't always happen. It happened in 1994, and we're getting it now again. But at any rate, the key in this is the acres that are available. We've got 3 million acres coming out of CRP. Where's that going to go? I personally have CRP that came out in North Dakota, and they're willing to pay me more than I'm sure I can get for cash rent now if I tried to rent it out in farmland. So we will do everything we can to put it back in again. So you'll see that move back in again. And basically what we've done with this report is proven that maybe 2008 was a nightmare that it went away. In other words, we shot grain prices real high. We found out we could produce a bigger crop worldwide in wheat, after $25 wheat in some places. And now we're going to try this slow growth again, where we increase world demand by 2 or 3% a year. And this year it says we got enough of everything for now. You can burn it, you can export it if you want it, and you will be able to feed it to livestock. So livestock, hogs, and so forth have probably gotten a reprieve. There's certainly no shortage of supply now, and that will help our livestock industry keep afloat. Now, having said all that, we've been waiting for, or the market's been waiting for this re-indexing, rebalancing, and so forth of the funds. A lot of money's come into commodities. They wanted to buy some corn. They were going to buy 60,000 contracts of corn the first couple of weeks in January. With markets down limit now, if you're a big buyer of grain and you want to re-index, I think you'll wait a day or two, and that's what they'll likely do. So, but what we'll want to watch for now, and what you'll want to watch for, is a recovery in this situation. So we've lost 30 cents. We've got a crop report in January now that probably marks a high for the year, just like it did last year in corn. We revisited back in June again. $4.40 isn't high-priced new crop 2010 corn, so I would look at any recovery back to the $4 level or the 440 level again as a selling opportunity. But in the meantime, I look at it and say, where did we open today? And we opened down hard. And then I want to take any what I would call a collapse in this market now that we're doing this, any recovery of 40 to 50% of that level to start pricing some more grain. If you haven't sold anything at all, you've got a problem already. But that's the market should recover half of that, and even at best, we may see this market go back up to where they traded last night, or maybe the day before the crop report. That looks as it's going to be a big barrier because we know more information today than we knew yesterday. So I look at these targets to go back up and try to regain 50% or more of any kind of drop that we have. We dropped 40 cents. I think you got to look at this and say, boy, I'm a lot smarter today. We got a lot of grain growing, and I better get something priced for old crop and new crop, and certainly for new crop, and especially in the bean market, because we're going to force people to plant beans. So this thing isn't over yet, but it certainly puts the burden of proof on the producer that he can't produce enough just to get by again for another year. And again, anybody that was right on the right side of this thing, and there are also, every time somebody buys corn, somebody sells it on the Board of Trade. There's always somebody taking the other side. So those that sold out ahead may need to take a look at this and say, what could the government tell me on March 10th? Now, you understand that in March 1st, they're going to take another stocks report, and that says, what we thought we had in December 1st, which is also today, and now what do we have in March, and how much corn, and if they go back and ask the people the corn in the field, did you get anything harvested this year? There's still a billion bushels of corn or something in that neighborhood left in the field in North and South Dakota and in Illinois. I've got 40 acres left. At these prices, I'm not real anxious to jump in there and do it now, but in this weather. But they will ask again. So on March 10th, when they do the USDA crop report again, they will have revisited some areas and done another survey. Then they'll also know what's in the elevator, and they'll get a pretty good handle on what's out there. This has been a very difficult year for us and a very difficult year for the USDA to come up with some accurate numbers, probably the most difficult ones that they've ever seen. And some of them are too young to even remember what a frost does or what a drought does in '88 that are now working for USDA. So give them a break, let them digest these numbers. But could it get worse than we got today by March 10th? Probably not. So we will see somebody wanting to re-own some of their short positions. That ought to give us an opportunity to get a rally into that March 10th report. And then, of course, March 30th is planning intentions. In the meantime, you've got February coming up here that is going to set the revenue for the crops that we're going to grow. And regardless of what the supply and demand differences is between them, between corn and beans and wheat and the different classes of wheat, a lot of people will look at that revenue side and say, probably this year it's going to say, which crop can I plant and lose the least in case the prices don't recover? So we've got that job to do yet in February. So not a lot of good news, but the good news in there is that it keeps the livestock alive. We'll probably burn more in ethanol. It makes the ethanol look a whole lot more attractive, even though that some of the crude oil and so forth is down. And if we can get the economy to recover worldwide, we have a whole 16 months yet before we got to worry about planning, harvesting, and selling next year's crop. We got time ahead for this thing to recover back again, and certainly we've set a line in the sand here, though, that anything above yesterday's highs has to be sold. So with that, good marketing and good day.